Hello traders, welcome again to another video. This will be a continuation of the market review and price action that I began yesterday. So yesterday on Nasdaq, I told you guys that we are supposed to be looking for sells, and I told you for example, maybe you can position yourself for sells from this point, targeting the low, like the low side of it, and I also give the reasons why I was selling Nasdaq. And as you can see, we were tapped in on entry, but the stop loss was not really, because I said that I wouldn't like this high to be touched on Monday, and the price did not do so. But now from the look of things, this high is going to be touched, because the way the price action is moving here, I see some bullish mentality in this market. And that being said, I always have some rules, because I often don't leave positions running till the next day, meaning that at some point, when it reaches some point, for example, I'm using UTC plus maybe UTC plus 3, whenever it reaches 22 p.m., that's not 24 hours, I always close positions, because after that time, I won't like to be in the markets anymore, because a new day usually comes in with a new sequence or a new market, directory sometimes. So this is why you see, for example, if this position I entered here, and just realized that this market is kind of switching up, or maybe we are almost midnight, or the market's about to close. The market closed right here. I would have just closed it immediately right here at that maybe break even, or maybe 1 to 2 or 1 to 1. I don't really care, because the real issue here is that from the look of it, when we go back to daily time frame, remember this still reading price. Yesterday, remember guys, I told you that I would like this Monday candle not to displace even above the consequent encroachment, which it did not. And coming today, as you can see, we've taken the sell side liquidity of Monday. So the manipulation has already happened. That's why you're even seeing me, trying to, long some Nasdaq here. Though it was not on at the right position, it was supposed to, the buying was supposed to be happening around somewhere below here, not really where I've longed from. So meaning that our next target is gonna be this high, and I don't really trust this high only. We are likely going to be filling this gap. So price is likely to come in and close in this bearish daily, fair value gap here before we drop lower. That being said, this high, which I said that we are not likely to touch, I've now changed my market sentiments. Remember, for you to survive in this market, you need to understand that it is always changing. If you are bullish right now, doesn't mean that you're going to be bullish in the next 5 or maybe 3 hours. So the best part of it is that when the market changes, you change along with it. You don't become one-sided biased that if it's about sell, it's only sells only. You have to, now that's the concept of reading price. You have to read the price like you understand what's happening. You have to check on specific time intervals. I'm not saying that now you spend the rest of the day watching the charts. With experience, you'll be able to know there's some secrets of time whereby sometimes you need to check in and see what's happening on those specific times. Have we broken any structure? For example, here, I might say that we are going for this high, but as you can see, price action, we still have some bearish hourly fair value gaps here. It's important to mark them. And somebody will say that we've had maybe a break of structure here, so we are likely to be going lower. But from the way I see it, from the way I look at it, whatever happened yesterday here was not really supposed to be happening. I was not even expecting price to reach this level, and this is my reason. Now look closely. Yesterday, before this entry happened, we had this bearish hourly fair value gap here. You see this one here. In this bearish fair value gap, I did not like the fact that we closed aggressively above it. As you can see, we closed aggressively above it. The moment we close aggressively above it, and even above this high here, aggressively above it, meaning that the body closed above this gap, violating it, and as well above this short-term high, This showed interest that price is interested in going higher here. And once we are up here, my next drawn liquidity is this bearish daily fair value gap, and that's nowhere that's where I think price is going to. And once price reaches here, we gotta take a look at the price action of what's really happening once we're up here. How do we displace? Do we have a couple of hourly candles consolidating that area, showing signs of rejection before we now initiate sells? Because we just on the bigger picture, we just hit all-time highs on Nasdaq. I think it was on Wednesday 13th last week, if I'm not wrong. And you see, whatever you're seeing right now is just a corrective move of this market. You see, so I had initially said that we were supposed to be selling. So in case maybe you saw that video and maybe you've already positioned yourself for sales and you put your stop loss here, I'd urge you to just exit that position at BE right now and position yourselves for a little bit of longs, which I wouldn't really advise you to do so, because this will require a little bit more of advanced market reading, because it's very dangerous buying here, because we have some opposing liquidity like this bearish hourly favor gaps, in which from understanding me, I'm still going with whatever I saw here with reading price, as much as these ones have been created, and this ones now makes it harder to trade in this market situation. So I'd advise you to wait until we tap liquidity above here, then see if we tap this daily bearish fair value gap, then maybe you can position yourselves for sell. Now the sell can be around maybe from there, given that you can put your stop loss above that high right there, because I can see we have another bearish hourly fair value gap here. It's important to mark them, because sometimes price might just want to tap in. So stop loss being up there, and letting it run. And that's it for Nasdaq. On the other hand, when you go to gold, I remember yesterday gold, we were looking for buys, and I told you guys the reason why I was buying. We had balanced a bullish daily fair value up there, and the price had shown signs of wanting to go higher. And if we take a look at the entry model that I took yesterday, because I remember yesterday telling you guys that I would like this low here to be taken, then we go higher. Okay, and exactly that's what really happened. We took it, then we started going higher, then we had a break of structure, price came back again to give another entry, and going up higher. And I remember our first take profit, for those who can remember, was right here. I said our first take profit was TP1, was around here. And assuming that we are taking it right here, that will be around, maybe I remember it was around 1 to 4R. Yeah, I remember talking about 1 to 4R in the previous video, guys. You can check this out. I talked about this in the previous video. So if you're confused, like, okay, you didn't really see that, go check the previous video. I talked about our first TP was around 1 to 4R, which was, as you can see, tapped. Then price reversed, gave us, to give us the second entry. But I was literally timing for these highs here. See these highs? Yeah, it was around 1 to 8. Check the previous video. I haven't changed anything. And this is what literally happened. Remember, there's some rules. I talked about some rules whereby at some point in the markets, at some specific hours, once it reaches those hours, I don't want to be involved in anything in these markets, because meaning that the algorithm is going to be switching into a new model or into a new day that we're not assured that the previous day model or the previous day inefficiency or imbalances are still going to be into place. Price will just want to do some other things, and that's exactly what happened here. So as you heard me say that, whenever it reaches where's 22 p.m 22 p.m. right here. Once it reaches here, always I exit at this point here. So meaning that if I was in these longs, then price came back, and then at this point I would have exited. And the exiting point, if you're closely looking at what I'm doing here, this was exactly first TP1, which was 1 to 4. You see that? That time, it's exactly, it's right here. This is the time here. Once it reaches this time, I usually exit. But sometimes I can let it maybe go until now the market close hours. The market closed around here. The market closed around here. So if it was closing around here, still you would, close that break even maybe with a 1 to 1 or maybe 1 to 1.5 hour. Because you see, the reason for this is that if we haven't delivered yet here, then there's a possibility the new day is going to come with its own things. And you see, that's exactly what happened. So today, when today comes in, we came with the today being Tuesday, manipulation Tuesday, we take the previous day lows. You see, if you're bullish, we have taken the previous day's loss. And if you have put your stop loss here, meaning that you've already lost this. So those rules that are usually put in on specific times, but still we are bullish. And as you can see, after taking the previous day lows, price went on and delivered to exactly where we wanted to deliver. And now it's now kind of trying to make some correction move. So that being said, gold is still very, very bullish. And if I tend to look for an entry right now, I don't really see a good price action on gold right now, to be honest. Maybe until New York session, because this is London. We have this bullish gap here. We have this bullish gap. And as you can see, price is reacting well into it. Price is reacting well. And the bulls are still on. If bulls are still on, sorry. If you can remember, I told you guys that with gold, you can even target the all-time highs because that's where we're headed to. But with this price action, currently, not really, not unless this price comes to, back to this hourly fair value gap, meaning that it comes to discount so that we can position ourselves for longs. But with gold, it's a no touch for now because gold is most of the time heavily manipulated. On the other hand, as I've given you, my insights on Nasdaq, on what I expect with Nasdaq to happen, I still stand by my word. Let it, do its thing. I expect us to, go higher there, take liquidity up there before we rally lower. So that's the continuation. And I think maybe I'll be doing this every day to give you guys insight of the markets. So make sure to subscribe, like, and share this video. And this will be just this for. This is not a financial advice, guys. This is just to help you guys to also able to understand how to trade price, on how I read it and how I take trades, and also to help you guys have that experience. And as well, some people can use it as confluence in their already experience. For example, some people will be like, okay, they already seen maybe a breakout structure right there, then they're waiting for a retest on a fair value gap, maybe right on there then. So it all works. Maybe some people will be looking at it in terms of, let's do a trend line here, the retail concept. Yes, there was a trend line somewhere here. Yeah, it was broken, so a retest. So then they buy. Maybe some people would be looking at it in forms of double bottom, the first one, second one, and they want to look for buys. And maybe some people will be looking at in terms of where's the support. Yeah, support. I think something, when you look closely here, maybe you're likely to find some support here as you go on the other side. So what I'm trying to prove here, or what am I trying to say? I'm trying to say that it all works, guys. Whether you're trading ICT, SMC, double tops, double bottom. Some people will talk about this, the head, shoulder. It all works, guys. But you see, I'm not looking into those things. I'm looking into like a more deeper price action thing. Some people just do a trend line. So the point of it is that it's all work. It all works. So I'm not here to confuse you that not unless you trade the way I trade, it's only the way you're gonna be profitable. But the way I trade is that I engage price action closely with inefficiencies because that's the nature of how this market works. And that being said, this will be the end of this video. So I hope to see you in the next one, maybe tomorrow or maybe in New York session, to give you insights of what I think is likely to happen. And remember again, risk management is key to surviving these markets. When you blow the account, there's no chances of you surviving. You'll have to look for money by another account, and it goes on and on and on and on. So risk management is the best, solution to keeping your accounts. That being said, cheers and see you in the next one. Bye.